Welcome to Module 11. In this module, we're going to discuss the shakeout strategy. There's going to be two subcategories in this strategy. One is going to be the trend shakeout strategy, and the other one's going to be a countertrend shakeout strategy. The high probability one is the countertrend compared to the low probability one of the trend-based strategy. Let's go for the background for the shakeout strategy. As I mentioned, there's two types of strategies, trend continuation and a reverse counter trend. The trend continuation has a shakeout arrow in the direction of the shade. That means it's trend continuation and you really don't know how much reward is in there, so we classify this as low probability, okay? By default, the trend continuation arrows are off. If you want to see them, you have to turn it on in the configuration screen, which I'll show you in just a moment. The reverse counter trend is high probability, and by default, these are always turned on. You can't even turn them off. You have a shakeout arrow on an orange bar. When this happens, it's high probability if you have some of these situations in here, okay? Some are mandatory, some are optional, and you could see the ones that are optional. So for us to go counter trend, we really want to see one of two scenarios. One is the previous trend has reached the target, the blue crosses. If it's reached the blue crosses, at it or gone past it, that's ideal because it means it's now ready to reverse. If you don't have it at the target, what you want to do is you want to make sure that the trend that you're in now, let's say it's a green shade, if you look backwards, the previous shade was green too. So it's a trend continuation shade. If the previous trend was, if the current shade is green and the previous is red, it's not trend continuation at all. So you really don't want to go counter trend because it's the beginning of a trend. So either you have two green shades in a row or two red shades in a row, and that's a trend continuation trade. So if you don't reach the targets, at least you got to have the trend continuation shade. If so, now you could go opposite. The other thing you could have is overextension, the black vIMTF dots. If you have that, that's perfectly fine. When you enter at the end of the bar, there should be no shade at all. You're going against counter trend, so you really don't want any shade, any momentum there to sit there and take you one direction, the opposite. Next, as you mentioned, we mentioned before over and over, on counter trend, we want 3-to-1 reward risk ratio or higher. That means we have to look to see where the original trend started and to calculate where if it's 5-to-1 to the origin of the original trend. Also, since you're going counter trend, you really can't go to break even. You have to maintain the red dot stop completely. Let's go for a couple examples. So we have everything turned on, even trend continuation. So here's a trend continuation trade. It's on a yellow bar. Notice it didn't enter at all. However, these are low probabilities here. You could see even here, they're all low probabilities because they're trend continuation. And you remember, you don't know how much reward is left. And if you look at the previous shade, it was green. So this is now green. So this is trend continuation. So these are low probability trades. What you're looking for is really the orange bar with an arrow in the opposite of the shade or going the opposite of the trend. You can see in here that this got to the target here. This printed after the target. So this meets one of our criteria. We had the option of if it didn't get to the target, as long as the trades are the shades are continuing, which they are, you could still take this trade. So either way, because it reached the target or the shade continuations, you could take this trade. You had an entry dot here. It didn't enter at all. And you could see it kind of went backwards, forth, back, forth, and really did nothing at all. If this had entered here, it would have had a high probability to go down, but it never did. So this is a trade that really didn't enter, but it looked good because of all the criteria. Here is another example here. This is a crude oil here. And you can't see this here. This right here was an opportunity right there. This had a green shade previously. It didn't reach the target at all. So this was still an opportunity because of the trend continuation. So you would take this trade right there. It validated. It was profitable. Next one's V closes below there. And remember, I mentioned you cannot go to break even on these trades because they're counter trend. So you got to be willing to take that risk of that dot right there. You could go and later on change your stop with orange bars or TNTs, but initially you can't, okay? And I don't even suggest you change your stop with yellow bars or TNTs, because if you do, you possibly could get stopped out, okay? So counter trend, you got to be willing to live with a do or die situation of the red dot. You could see this kept on going down, 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 kept on going all the way down here. So this is a great trade here that worked out really well, and that's exactly what you're looking for it to do, is reverse the whole thing. You can't see the previous part, but the beginning of the bullish trade was way down here, which it pretty much retraced. Here's an example here. This is a live one. This is power here. You could see it reached its target here. So now you're looking for a short. There it is. You entered here. First, you're looking for this quarter to be profitable at the end of the quarter. If it is, then you're looking for the second bar. If everything works out well, this can now retrace the whole thing, and this could be the top. Here's another example here. This is a orange bar here. It had an arrow, and you could see it entered right there. It validated everything. You got the blue line, took you all the way down to here, and that's a great reward risk ratio right there. Here's another example here. This is an example of a orange bar here and an arrow here. So this is trying to go up. Now you have to look, did we get to a target? I can't see we got to a target. Now you're looking for the shades to continue. This is a red shade, that is a green shade. The shades are not the same at all. So really, this didn't fit the criteria to a point you should enter this trade. And if you did enter, you lost. And you could see that completely here. The reason why this went down is because that was a TNT strategy right there that took everything down. And over here, you could see you have another strategy here. You can't tell if it got to the target. However, it did sit there and give you a trend continuation shades right there. So you could take this trade here and you took it all the way down to the vIMTF element here. Now, you could take this reverse strategy against a green bar, but I would hesitate taking it against the vIMTF red strategy because that's more short term. The green could be far away, and that could be a great reward risk ratio, which is what you're trying to look for. Also, this green here was short term, so it had a high probability to get back to the origin of the timing element, which is right there. So you could see the reward risk was great, 7-1, and that's why this was a great opportunity. This now concludes Module 11, where we talked about the shakeout strategies. Remember, there's two types. One is the trend and one is the counter trend. The trend is low probability, and that's why by default it's turned off. The high probability is automatically on all the time, and it's looking for a shakeout arrow on an orange bar. And as long as you reach the target of the previous trend, or you have shade continuation shades, then it's a high probability trade to reverse.